Hello guys, I hope the slides are going to come up. Perfect. So hi, my name is Matiss, I'm the co-founder and CEO of Creamfinance, and today I'd like to tell you what cockroaches have in common with entrepreneurship and with fintech. And before I do that, I want to conduct a small test, and this test is called the fintech bullshit detector. Okay? So you're going to have to ask yourselves the three following questions, and I'm going to go very quickly, so you have to catch up. Number one, are you excited by cool business buzzwords? You know, things like AI, big data, self-learning algorithms, ICOs, blockchain, all these kind of things. Second, do you admire like hipster-looking founders that talk on fintech stages about changing the world with their unicorn company without explaining how it can be a profitable business? Yeah. Number three, do you think that UX and user growth and other non-financial metrics are more important than profitability, than operations, than managing people, and so on? And so if the answer to any one of these three questions is a yes, then my dear friend, you're caught up in the fintech bullshit. Okay? But I'm not judging you, because it's a very popular place to be. Many VCs, most journalists, and many entrepreneurs are in that space with you. Yeah? What I am saying is, especially for entrepreneurs or people that drive fintech companies, is to decide whether you want to be profitable or if you want to be popular. Yeah? To make it extreme, it's a bit like in the Matrix movie. And so today I want to kind of share our story in Creamfinance, how we built a company using this cockroach mentality, right? And when you really focus on making money, you have to think like a cockroach, meaning you have to figure out a way to spread around the world in the face of adversity. You have to, find ways to multiply even if everybody's trying to kill you. And eventually you have to, focus on real things, be hands-on, focus on real value when everybody's seemingly looking at fake unicorns. Yeah? So this is what we're going to talk about. Now, just a high-level overview of Creamfinance. Our mission is to make money available. We do that by providing consumer loans online. We lend anywhere from a few €100 for a few weeks, all the way up to a few €1,000 for a few years, and everything in between. Yeah? Online loans, and we lend from our own pocket. We're not a platform that matches up lenders with borrowers. And there's three things that we really focus on when it comes to consumer lending online. Number one, we want to make borrowing money online as simple as clicking one click. Number two, we use what we call smart data, and I'll explain the terminology later, to process, verify, and score our clients. And the third, we believe that focus is power. Yeah? You hear a lot about the new disruptor banks, fintech banks, Amazon of financial services, and other cool phrases, right? We really focus on, instead of all of that, we focus on providing unsecured consumer loans online, but we want to do it around the world. Yeah? In this slide, just the high-level kind of highlights, pointers of what we've been through in Creamfinance. So we started the company in 2012, about 5-6 years ago. Now we operate in 8 countries worldwide. So we actually have offices in these different countries. We employ close to 400 people with a head office here in Warsaw. In revenue, we're making about 50 million per year, or in 2017, and we're profitable. Yeah? Remember, very importantly, building a company without profits versus building a company with profits, two different things. And we raised around 100 million in various forms of financing, and we've been listed as the second fastest growing company according to the Inc. magazine. So that's all good. To give you a context in which we started the company and grew it around the world, I want us to kind of show you this landscape of online, lending companies. Yeah? And you can see by sort of the different type of different categories of online lenders. From the very top, you have the so-called peer-to-peer companies. So those are the recently popular platforms that match up borrowers and lenders online. Then you have subprime lenders that are companies that lend to consumers that are considered higher risk. Then you have purchase finance, which is basically companies providing credit when you want to buy items online. So you go online, you want to buy a couch, you can't afford it, and so you effectively borrow and then repay the loan. But you get the couch instantly. Then real estate lenders, so those are companies that lend using online platforms, but use more traditional things like real estate as collateral. And then the last two positions, basically companies that lend to small and medium businesses online using a lot of online data. So Creamfinance belongs to the subprime category at this stage, yeah. And there have been two kind of main driving forces that have enabled our industry and that has made our industry prosper quite fast. So one is companies like ours back in 2006, 7, 8 started by lending very short duration, small size loans up to 1 month, which meant that we quickly learned to underwrite and score clients because we had this massive, speedy turnover of data, okay? That's one. Second, a lot of regulation came into the market in the last 5 years, especially across Europe, okay? Which meant that, there are rate caps, licenses, capital requirements, and so on and so forth. So from many new companies that emerged in this online lending space in 2006, 7, 8, several have become dominant, and out of those that have become dominant, about 5 to 8 of these companies, including Creamfinance, we have developed, not only the short 1 month loans, but we've gone into places like credit lines, installment loans, even bank products like deposits, point of sale loans, credit cards, and similar. That's one thing that these companies have expanded into. The second thing that we've expanded into is new regions. Yeah? So we started in Europe, but we've gone into these frontier markets like Southeast Asia, Latin America, and some companies even in Africa. Okay? So this kind of gives you a sense of how the industry looks like and how it's evolved, and you can see only basically the key companies per category here. So this is definitely a very big category, and certainly by any measure, it's the biggest category in fintech overall. Yeah? Now, in this last part of the presentation, I want to give you a sense of kind of our journey that we've had in Creamfinance, and maybe there are some pointers, some useful points for you. And I want to start with this fabulous picture. It's our amazing office back in 2011, 2012, which is really just a desk space that we rented for like 10 euros. And that's just 5, 6 years ago. And even though we had this, really limited sort of amount of money, we always asked ourselves the most important question. Obviously, where's the focus? That's the question, yeah? I'm sure that's what you meant also. And in Creamfinance, our focus, or the question we've always asked, and the focus has always been on operational excellence. And you can understand, different things when you say operational excellence. For us, it's really to understand the key drivers to your business model, whether it's lending or payments or whatever else it is, and only focus 90% of your resources on those key drivers instead of other cool and shiny things. In our industry of online lending to consumers, these key drivers are the three following. Selecting and scaling in the right markets, figuring out lean client acquisition, and a successful credit risk management. So the last few parts I'll talk about these 3 points. So the first one, selecting, scaling, and figuring out the right countries to go into, or in other words, international expansion. Yeah? To mention, like I said, we operate in 8 countries, so we have a good understanding of how to look at countries and go into them. So there's 3 things. First is fail fast. Yeah? So in Creamfinance, basically, when we go into a new country, we do it like a trial and error approach with limited budget. We don't do lengthy planning or research heavily in due diligence, etc. What we do have is a small team of people that constantly look at different countries, different markets. If something looks appealing, we do a deep dive in that country. We speak to people there locally, and it takes like few months to set up the business in that country if it looks interesting. Yeah? To follow on that point, fast, small steps is the next thing. So you don't want to overspend if you go into a new country and if you haven't validated if it's the right market. And even if the competitors are louder and shinier. What you do want to have instead is to set up a small representative office, cost you like 10 to 15, 20,000 euros if you're really smart and lean. And from there on, you will have this one desk space with one person, and from there on, the real learning will start. Yeah? No amount of Google research can replace the lengthy process of opening bank accounts, opening and getting licenses, and so on. Yeah? And the third point, probably the most important, is hire locally. In our experience, we're operating in all these different countries, and when you go into a new country, you want to make sure you find a person locally, either an employee or a joint venture partner, depending on the context, that will develop the business for you. Yeah? You don't want to do it yourself across all these different countries, because every country is slightly different. Yeah? Customs are different, culture is different, language obviously different. You want to focus on getting the right person or the best people in individual countries instead of trying to do everything yourself. All right, that leads us to the last point, which I collectively call smart data approach. Okay? It starts with the first thing, lean client acquisition. Yeah? We operate in consumer lending. It's a very marketing-intensive world. Everybody's shouting very loud. There's a lot of budgets, a lot of money invested, and it's hard to invest smartly. So therefore, we use mostly, not only, but mostly performance marketing channels, things like affiliate marketing, networks, API partners, lead generators, and so on. But what we have figured out as one of the few things is how to establish the credit quality of the users that come to our website before they have applied for a loan. So that if that quality of the user from credit check standpoint is below our criteria, we can go back to the lead generator and reject this lead before having to pay for it. Does it make sense? Yeah? And this is just one way of how we've figured out of how to be smart with our investment into marketing. The second point is data-driven scoring. So, like I said, in the last 5-6 years, we've been really kind of focused on building data-centric, data science-driven scoring, or establishing, whether the client will pay us money back or not. We look at a specific type of data. We don't want to look at everything. Yeah? We look at the client's bank account through automatic crawling. We look at the device. So we see what type of device you're applying from, old iPhone, Galaxy 5S. We see your IP address, and we see what other transactions you've done online. Okay? And these are just the few things. And I see already I'm being kicked out of the stage. Last point is automated collections, which is basically we've built call centers around the world to make sure that we collect this money from clients in a customized way. So for example, in Mexico, people use WhatsApp for communication far more than in other countries. So we are collecting through WhatsApp, which is what we don't do in other countries. Yeah? So altogether, we've been real cockroaches when it comes to building a company when everybody's trying to be a unicorn. So I hope this inspires you to think like a cockroach also. Thank you.